I am Adam Snyder. I'm the North American editor for the Fintech Times. I'm here today to bring you a webinar focused on the world of Insurtech. We have an excellent panel. We have Vikas Chhariya from Indeez, based out of Paris, France, Mark Tattersall of Westlake, California, with BackNine Insurance, and Mark Musson from Humn.ai, a London-based company. If we look at the market, it's booming. And that's a good thing for both businesses and the consumer. But the real question is, how do companies differentiate between the two when they're building products? So with this webinar, we're going to look at the strategies needed to compete in both markets, from new tech adoption and statistics-driven algorithms to featuring on-marketplaces and cashback incentives. This webinar will also tackle the thorny issue of insurance around the globe and how Insurtechs can adapt to the regulatory concerns of each market. So first, as I mentioned, panelists, we have Mark Tattersall, principal of BackNine Insurance and Quote and Apply. Mark is the principal. It's a boutique life insurance company, and it's behind the newly released Insurtech platform, Quote and Apply. Quote and Apply was created to better serve the life insurance sales professionals around the US through its intuitive, user-friendly e-application and quoting software, along with 24/7 policy selling capabilities. It's intended to optimize sales for anyone selling life insurance, agents, financial advisors, wealth managers, mortgage brokers, and beyond. Quote and Apply is an imperative for policy sellers and consumers alike. It makes what was once a cumbersome process of life insurance quoting into one that is highly efficient and attainable. Individual policy sellers, CRMs, and enterprise agencies are also able to white label the software and embed it directly within their current websites or software systems. It's the essential tool the life insurance industry was waiting for, and currently offers over 50 carriers and counting. It's clear why Mark was featured in Forbes for disrupting the insurance industry, and head to quoteandapply.io for more information on the platform. So Mark, traditionally, how tech forward has the insurance sector been? And do you think the sector overall should be and can be doing more to integrate tech forward solutions?
Well, that's actually perfect timing and a great question. I've been in the insurance business right out of college, so that's 45 years. So I was trained in a very traditional format. They referenced it in the life insurance space as a career insurance agent. So you would be trained by manuals and books and videos, and then you'd be trained on, to be able to go see clients and such. And that system in our space, in the brokerage insurance, life insurance space, was the main and pretty much the only way to learn the insurance business. And that's how most people did. Approximately, Adam, 10 years ago, my second son joined our agency and said, pretty much the way insurance has been done for your 40 years is not the way going forward it's got to be done. So we together started to design first our own CRM, along that would pair with what we wanted to do. And then they went on to go develop Quote and Apply. It's a proprietary system, and it's designed to be able to put people that aren't necessarily in the insurance space, have it be property and casualty insurance agents or wealth managers, or anybody really, Adam, with a following. Suddenly they could be in the insurance space with their following 24/7, white labeled, as you've referenced, and gives everybody the chance to market 50 different insurance companies for different products. It aligns as well with somebody if they're specific, have a medical condition, or they're a pilot, or they smoke cannabis, or whatever it is. We've mapped over 100,000 fields with 50 different companies. And so your question is really apropos, that taking the old system, the way most life insurance has been done in the brokerage insurance space, and adapted it to a new format. And it's met with pretty much a resounding success so far.
Interesting. So Vikas, in looking at your company, Indeez, designed to enable independent work and really, on your website, I think it's very clearly put, make sure that it continues to be a growing force in society. I imagine insurance is something that is coming onto people's radar as independent workers that really wasn't there before, as the gig economy is becoming the economy. Looking at the same question, I guess, but with a slight skew towards independent work, how do you think tech impacts insurance for independent workers? And I guess the better way to put it is, how do you fit insurance into the tech that impacts independent workers?
Yeah, oh, that's just checking with my mic on.
Yeah.
That's a very good question, and this is something that we have reflected over the last 5-6 years. So if you think about Indeez and what this team has done, we have been working on topics such as social protection, gig protection since 2015. We have built some of the largest gig protection programs for the likes of BlaBlaCar in Europe, Uber, or for example, and these are some of the largest gig protection programs that exist anywhere, period, right? And the way, more broadly, kind of building on what Mark was saying, I think the insurance industry has done fairly well in leveraging tech, in adding new data sets, in building new risk models, more precise risk models. But if it has not kept pace with the acceleration, I would say, in new technologies and new customer behaviors that we have seen over the last 10-15 years, sharing economy, gig economy, and more specifically independent workers. What we are seeing is that independent workers today globally comprise anywhere between 31-33% of the workforce, and over the next 10 years would go up to about 45-46% of the global workforce. And with the COVID pandemic, this change is only accelerating. So I would even punt by saying that in the next 10 years, we might see 50% of the global workforce to be independent, right? Which including gig workers, freelancers, developers, etc. And the early signs for that are already there. You look at US, 50% of the workforce is already independent. You have large companies such as Google actually using permanent employees and using contractors. You have governments actually doing that. So this change is going to accelerate. So the point remains is, how do you empower independent workers so that they achieve their full potential? Now, you might be a developer, a designer, an artist, a curator, a doctor. And the point is that unless you are a high-skilled worker like a lawyer or a doctor, you should be able to pursue the choice of independent profession without having to worry about some of those things. So insurance does play a very critical role. And we are focusing on specifically independent work from the point of view in the near-term future, thinking about how do we protect their assets? How do you help them maximize their health and lifestyle? And one of the key gaps that today we are focusing on is addressing the income protection gap. So think about in Europe, independent workers do not enjoy the same access to income protection or protecting their income or their lifestyle as the traditional employees do, which means that if you get sick, if you are infected in this pandemic or you can't work, the state takes care of your medical expenses, but nobody actually really compensates for your loss of income. And for us, that is the fundamental gap in the market when we're thinking about solving for independent workers. In the medium term, we want to address this problem for the 60 million independent workers in Europe. And from a tech perspective, we chose the path we chose for Indeez in terms of an Insurtech, because we believe we could actually build a technology platform that would be able to serve products that are API based or on demand, products that would create a fully digital experience for them. So the accessibility is not an issue. Pain points around claims can be removed. And then Europe is not one single market. Europe is a consortium of different markets. So how do we work with B2B platforms so that when we serve the communities, we can build nuanced differentiation by different markets, by different tier of the community, and that could be sophisticated at a pricing and a benefit level.
That's very interesting. It's also interesting how you account for the differences in markets, especially if you're just looking at Europe and the point that you made. Thank you for that. So Mark Musson is from Humn, an AI-powered practical tech company that has data, but down to earth, which I think a lot of people would welcome. Your tool, RiskOS, it's very interesting the way it's described. The most powerful risk assessment tool to date. The most powerful risk assessment tool to date. All risk involves data-based odds. RiskOS leverages machine learning to create stunning, accurate risk models that evolve in real time. It's the brains behind our new fleet insurance product, rideshare. So I'm interested to hear a bit about rideshare, Mark, but also, if we look at Insurtech, what is it? It's insurance and it's technology. So Mark, if you could tell us, how much do algorithms and statistics play a part in the strategies that Insurtechs need to compete in larger markets?
I think it's core. I think if you try and segment Insurtechs, you're really looking at the first wave who have kind of digitized the customer journey and are more focused on the personal line side of things. And then companies like ourselves who are focused on the core inner workings of the actual insurance product itself. And that's really where the algorithms come to play. And I think you asked it earlier, one of your first questions was how tech forward are insurers, and have they been almost left behind, I guess, is the question. And when you put it in the context of the way that I see insurers as the original data scientists and really the original data science industry, if you think about what we call data scientists used to be actuaries, and they were these like geeky fellas who did all the math stuff, right? So really what the evolution of tech platforms and then the evolution of data science really just brings the power of tech platforms back into that sort of actuarial domain. And what we look for is the ability to find novel rating factors inside of existing situations. And if you go to our products, we're a product manufacturer in the insurance sense as well, in that we've built a commercial fleet insurance product as well as a specific pricing model that runs inside RiskOS, which delivers a dynamic price. The core to all of that is our stack of algorithms. They run the gamut from detecting, and really what we're doing is building a much more real-time view of exposure. And on that basis, we're able to adapt price based on the actual exposure. And if you put it into the fleet context, and you can maybe extend that thinking to any insurable object, of which there's a whole bunch of them owned by an asset owner. Really how these things were rated prior was that the mathematical models that were applied were based on sort of the last 3 years. So the assumption that, all of your todays will look much like your last three, or all of your tomorrows will look like your last 3 years of claims experience. And then you sort of cut a price and you go away and you come back in a year's time and figure out how it worked out. What we've done is we've really taken that whole risk transfer transaction, the actual financial transaction, and chunked up the premium components, which are allocated to, you wouldn't see this as a buyer because you just pay a lump sum, but there are pieces of it that are allocated to administration, there are pieces of it that are allocated to the cost of running the company, there are pieces of it which are allocated to paying claims. And the biggest uncertainty is that big chunk around the piece that's allocated to paying claims. And generally it's sort of about 65 to 70% of the premium. And really the calculation that's done around that in the old school is uncertainty and lack of data. So there's a piece inside that piece, which is actually a reserve, which pays for that uncertainty. And really all we've done is taken a whole stack of relatively smart neural networks to say, at this point in time, at the end of every single trip, compared to a baseline trip in this area, relative area, this sort of relative time of day, this one is more or less risky. So the exposure was more or less. And then we're able to put a swing on that price and charge a loading or a discount because we actually know whether the claim is going to emanate from that specific trip. So really what we're doing is a parametric return of that reserve at the end of every trip for trips which are safer, and a bit of a loading for the ones which are less safe, which results in a much fairer set of pricing and a much more transparent set of pricing. But it also, extending that, we build a we're very focused on proactive prevention rather than reactive. Well, an event's occurred, now someone has to go and pay for it. So the other piece of the platform that we work on from a risk perspective is the risk management component. We have a lot of pattern detection algorithms that sit across this sort of cluster of insurable objects and say, okay, there's something that's not quite right. It's starting to go a little bit wrong over here. But if you do this intervention now, then you can bring that risk back into tolerance. So it's the ability to have this real-time view of data that really takes the old view of that mathematical model and kind of makes it live, really. So the principles that we're working on from the insurance premium calculation are still the old ones. But what we're able to do with the application of technology and algorithms is be much more fine-grained and a lot more certain about where the risk is, and therefore produce a much fairer and a much more, I guess, aware price. And then also what we bring is certainty down the line that there isn't going to be some claim arising for whiplash or something like that, because we know that there's a very low probability that that incident occurred on that particular trip. So hopefully that gives you a view and an explanation of what we as a tech company do. And just on Insurtech, we didn't start in insurance, we started as a data platform. And then working with a fleet, they asked us to solve the insurance problem. And that's really how we stumbled into this wild world of insurance, which has been pretty exciting for us for the last 2.5 years to build out this insurance product and platform that's kind of game changing in the world of fleets.
Very interesting. First, I loved how you described insurance, or people in insurance, as being the original data scientists.
Yeah.
I was trying to capture those words to use in my intro, so I was happy to hear you say that. Also, Mark Tattersall, I know you've been in insurance for 45 years. Have you ever heard anybody refer to it as a wild industry before?
No, not by any means.
There we go. So then tech is definitely changing things.
Yeah.
It is wild if you think about it, because it's all about risk transfer. That's the transaction you enter into. You say, I have this thing that might happen. It's going to be like, it could be a cyclone that hits me. That's pretty wild if you ask me. Or it could be a boiler that explodes. That's also quite a wild event, as long as it doesn't happen in your house and someone agrees for the premium to kind of cover you in the likelihood of that happening. So, I mean, when you start to unpack it, it actually is quite interesting.
It's very interesting the way you put that. I'm going to need to pause for 1 second, because apparently there's landscapers in my backyard, and I don't want that to, this is the joys of working from home, but I don't want this to ruin the recording. I told you I was really going to make Dominic work on the editing. Sorry about that, everyone. Okay. So, Mark Tattersall, question to you. What is it that Insurtech companies should really consider when they're selling to a B2C audience now? Well, actually, let me ask that better. Sorry, 1 second. So I love the editing. Mark Tattersall, can you please tell us, when considering the B2B audience, what are the key considerations for Insurtech companies now, and how are they different from, say, 3 to 5 years ago?
Well, it's pretty, from B2B, Adam, can we go back and I can answer the second question first?
Sure. You want to do the B2C?
Yeah. No, you got a question about Insurtech market in recent months.
Oh, sorry. Yeah, I thought we covered that in the answers, but let me do that now. Sorry. So, Mark Tattersall, if you could, what are the key changes that we've seen in the Insurtech market in recent months?
Well, with COVID being such a prominent portion in the United States, fortunately with our platform, we were years ahead of that. So the ability, Adam, to not see people and to visit people, to visit businesses, everything's being done online. And so to have a platform that effectively can quote different companies, you could do a Zoom meeting to sell insurance. We've pretty much been ahead of the whole COVID market in terms of that. The other thing that's been amazing in recent months is with the insurance industry, life insurance industry, it's been very, very difficult because the insurance carriers themselves, the gigantic carriers like Prudential and John Hancock, everybody's been working at home. So in processing our business, typically it would be a 30 or a 45-day run before you would get an application actually issued. Now with employees that are working from home, there's been a tremendous influx of new applications of life insurance being sold in the United States. So it's only kind of furthered the delay in getting applications issued. So what we've seen a lot from a timing standpoint in the last year, particularly like last month, is a big backlog of insurance companies issuing the insurance policies. So we're selling them, but they're not issuing them.
Very interesting. Very, very interesting. So Vikas, on to you. When considering the B2B audience, and let's call it the new B2B audience, if we think about independent workers, what are the key considerations for Insurtech companies?
From my vantage point, when we're thinking about B2B customers, I'm really thinking about them. I see it as cluster of communities, right? The cluster of independent drivers, independent delivery people, the cluster of community of people doing home sharing, etc. And I think one of the key things where I would stress is that the B2B community here, or the B2B customers here, play a significant role in scaling many of the insurtechs we are looking at today. In my 5-6 years of short work within the insurance industry, we have seen, or I have, that the B2B segment is quite an important segment when we're thinking about understanding customer centricity and defining those products. At the end of the day, whether you're targeting B2C or B2B, I think the question to ask is, when insurtechs are solving problem, what customer problem are you solving for? What customer stories you are building from an innovation perspective? And therefore, what is the tech then you put around it? What kind of data you bring around it, algorithms, etc. And when you think about B2B customers or B2B platforms here, this is really where I think there is a lot to learn, because these B2B platforms have built their community with some sustained work around understanding these digital communities, which in my view are the new markets today. You know, these are not the traditional markets of North America, South America, Northern Europe or Southern Europe. You have to think about communities of people doing home sharing, communities of people doing ride sharing, communities of people. And then the moment you think about it, you see that this community has certain common behaviors and therefore common risk needs that you can actually define and build that could be rolled out across different geographical markets.
Interesting. Mark Musson, the same question to you, but if you could put it through a B2B, B2C lens and really focus in on what are the key tech considerations that Insurtech should focus on?
You're talking about for B2C, right?
Yes.
Yeah, we're mainly a B2B proposition, but we do think very much about the B2C component as well. And I think it really relates to distribution, ease of distribution, one-click buying, but also embedding. And we within our proposition, we very much work on platforms and embedding. And it really should be a similar sort of experience from the B2C component, whereby it's kind of insurance inside, so you don't even see it, right? So really, it's about protection. That's why you buy insurance, and if you buy your product, it should just be, yeah, cover me for a year as well at whatever, three pence a month. So I think the skill of from a distribution perspective of or at least having a strategy around specifically which platforms are material to your, as Vikas said, your communities, or however you view your ultimate end consumer. That's very much key. And if you don't have a platform strategy, I think that you're kind of missing a bit of a trick. I think the first way, very much app-based direct is I mean, that's like what, 5-6 years old now, maybe 7, I don't know. So app-based direct is it's really just a different way of reaching, and it's a convenience play. So I would call that the first generation, and and convenience is important. But I don't really think anyone cares anymore about whether it takes 3 or 4 seconds more to buy your policy via Lemonade or Metromile, whatever it is that you're doing. I think that's gone. Really, where the concern would be, and I think this is equally true for both B2B and B2C, is you have to make the insurance disappear. And to do that, it sort of plays to, well, how do you articulate the value of your proposition as well? So there are two considerations. One is, what's your platform strategy? And two is, if you make insurance disappear, then either no one knows it's there or no one really wants it. So therefore, you just become a commodified sort of piece of the price stack. And then you have to emphasize the protection components around it. So that's our sort of thinking, is you need a platform strategy, and then you need to emphasize your protection proposition within that platform. So as an example, we distribute via certain fleet management platforms, or actually a much better example from a B2B to B perspective is a very forward-thinking commercial electronic vehicle manufacturer, just recently listed on the NASDAQ, has actually embedded our products in two places. The first one is our risk algorithms in the actual vehicle itself on an edge processing device in the vehicle. And the second is our insurance product in their Fintech stack, which means that when their customers buy a fleet, they just click the box and say, yes, we'd like to include insurance in it, and it's already embedded. So for me, that's the next generation of distribution, be it B2B or B2C. It's harder B2B. On the B2C side, it's harder. The transaction's harder because you're dealing with very small fractional amounts of premium and duration of cover. So you're really fractionalizing that transaction as well, which means you've got to be on your volume game. So your platform partnership strategy needs to include like the extended reach of the platform as well. If you go with the best platform, but they've only got 3 customers and you fractionalize your price, then you've totally undermined your offering.
It's very interesting. The way you describe it, it really makes the case at why at times insurance is grouped under a financial service and why Insurtech is part of Fintech, because it really, they're both moving in lockstep, especially if you think about it from an embedded standpoint.
Yes.
We have time for one more question. So Mark Tattersall, I want to ask this to you, especially since you declared yourself to be the elder statesman on the call. If you think about how tech is changing insurance and the fact that more and more we're seeing insurance be a global product, how complicated is the tech-based adoption across global markets for insurance? And if you could tell us some of the key concerns, and also where regulation fits into that.
All right, thank you. With our platform and the ability for our customers or our agents or our businesses to be able to quote 24/7, have it be white labeled, it's working incredibly well in the United States. So taking a look at them at a global effort, as this works well in the United States, there wouldn't be anything that would really stop the advent of using this platform to a global network. It would just be, from a regulatory standpoint, you'd have to have the insurance companies just approve doing business with agencies like our kind of customers. But I don't see, from a life insurance brokerage standpoint, a wholesale level where we're at, I don't see any issues being able to take this technology and this platform into a global effort.
Very interesting. All right, thank you for that. Just one last thing. We're just going to go around for everyone. I want to just get one last statement from each of you. I think the way to put it is whether it's one key issue that you think is facing the industry or something that you want everybody to know about your company, something. I would just say, let's not make it too promotional, but at the same time be promotional, which I guess is half the time it keeps me employed. So we'll just kick us off that. So, okay, I'd like to thank everyone for joining. We're just going to go around for one last question. And really, I just want to hear from all the panelists. If there's one thing that you really want the audience to know about Insurtech and your company and your solutions, and I think overall where you fit in. Would love to hear that. We have, three leaders in the industry coming from very different places, and I think to really make this a well-rounded conversation, it's important to leave you all with a final word. So, Mark Tattersall, since the camera's on you.
Thank you. Yeah, I am very, very passionate about what we do. The ability to be in the life insurance space and to be able to offer that to hundreds of thousands of people is effectively serving an underserved market. In the last 10 years, our statistics for people that are actually purchasing life insurance is just going down every year. So many more people are being not serviced to be able to buy life insurance. So this technology platform of Quote and Apply enables property and casualty insurance agents and other people with any kind of following to have their clients be able to purchase life insurance. And by purchasing life insurance, the passion that goes with that is that changing lives, changes legacies, it promotes weddings, it has kids go to college. It's a real value add. It's not, so you match the actual ability for what life insurance does along with the tech platform, and we've been able to do that across the board. So I'm very excited about that, Adam.
That's fantastic. Vikas?
Here, I would basically point out for the audience here is we cannot address the question around future of work without addressing the aspiration and needs of independent workers today. We cannot. And therefore, if we have to truly address the needs and aspiration of independent workers, we have to find ways and means to empower them with these financial products, whether they may be around access to credit, whether it be around protection, etc. And this is really where Indeez is focused on today. We also believe that this has to be a problem that needs to be addressed here and now, and therefore it is very important for us to address the most pressing needs of independent workers today, which is around COVID-19. We have seen independent workers all across the globe have suffered with their incomes being lost, not being able to work, or not being able to work for the risk of COVID infection. And this is really where we have put Indeez technology, Indeez platform at play in deploying the industry's first COVID protection product for independent workers. We are building up a coalition, which today is about 12 European platforms across UK and France that are supporting and giving access to this product to their communities. And we are super excited to address the need of income protection, whether it be for pandemic, whether it be for sickness, maternity, and those everyday events, so that you could actually create a level playing field for independent workers compared to full-time workers.
Fantastic. Very, very interesting space. And Mark Musson, on to you.
I think it's great to hear, Vikas, your summary, and I think it's a very noble thing that you're doing, and there's purpose behind it. So I almost feel sort of slightly churlish sitting here and talking about the fact that we're super excited to be really in the forefront of ensuring autonomous vehicles and working on products for those. It's where our life as a platform started, not in insurance, but really around autonomous vehicles. And it does tie slightly back to what you're saying, because we work slightly one degree away from the actual driver, for example, in your world, and what we protect is the vehicle. But in our proposition, really what we're looking to do is improve the economics for the driver in that proposition. And that was our immediate first focus. And we managed to solve that. So in a very indirect way, we're also contributing into that ecosystem. But looking forward, what really gets us out of bed is the fact that we're able to work with some of the leading AV manufacturing companies and help them to solve the upcoming emerging risks that are going to come from autonomous. And it just happens that our platform works really well for commercial fleets as we move forward into that sort of realm. It's a 10-year journey, I would say, before we get there. But once we do, there's a collective mission around that entire ecosystem to remove vehicles from the road and remove carbon from from the atmosphere as well. So being part of that mission is I guess fulfilling for us in that regard as well. But being able to be the fastest way any insurer can do dynamic pricing without losing their own customers is what gets us out of bed today. So the combination of those things is really exciting for us as a company.
That's fantastic. And I think you shouldn't worry too much about autonomous vehicles versus human beings, because if sci-fi tells us anything, pretty soon those autonomous vehicles will have personalities. So it'll be fine.
Okay, great. Well, that's a relief to know. Thank you.
Yeah. So from the FinTech Times, I'd like to thank you all for joining us. This has been a very interesting conversation about the wild world of insurance. So Mark Tattersall from BackNine Insurance, thank you. Vikas Chhariya from Indeez, thank you so much. And Mark Musson from Humn. We really appreciate your time. Thank you very much.
Thank you, Adam.
Thank you, Adam.